Hi stock investors, JJ here, welcome back. Well, somewhat in the tradition of this pod, The Art of Value, we're going to get into Alibaba earnings today, which have just come out. Now, as a lot of people know, I'm an Alibaba shareholder. I'm still a shareholder, haven't sold. The shares are way down, and this is not investment advice at all. I don't do that. I don't give stock tips or recommendations, but we will dive into the earnings. We will have a look at the stock, and I'll give my thoughts along the way. We're going to have a look at the highlights. We're going to look at this presentation. We'll look at the stock price. We'll have a look at who other investors are invested. Now, if we see here, this is the stock price after earnings. You can see that it's only up marginally in the US market on the day. And right now, as I'm speaking, which in China will be during the day, just starting this share market there, it's up 3%. So bouncing after that, which is interesting. We'll have to see if it bounces in the US as well. But going back year to date, we can see it's up 6.39. So it is actually up, not beating the S&P 500 or anything. Going way back there to that peak, it's still down from there, nearly 75%. So still a long way to go. Can it bounce back? Well, let's see if there's anything in the earnings that could think that this could happen. And so what is management saying this time? Our results this quarter demonstrated our strategy at work. Our focus on enhancing user experience by offering quality products at attractive prices with great service led to stabilizing market share of Taobao and Tmall as we returned the business on the growth trajectory. How much growth? That's the question. We'll find out. The cloud business achieved positive revenue growth momentum driven by public cloud and AI related product adoption as we continue to invest to maintain our market leadership. Now, they mention AI there straight up front. You'd expect that. This is from Eddie Wu, Chief Executive Officer and the new CEO. In this quarter, we continue to invest for growth in our core businesses while reducing losses in our business units through operating efficiency. So they've been talking about efficiency, but they really have been talking about returning to growth. So let's see if they have done that. Now, as we said, the Chinese economy is not in great shape at the moment, so I don't think we can expect too much under those circumstances. We maintained the integrity of our margins and delivered consistent adjusted EBITDA. Charlie Munger wouldn't like them talking about that. We also returned significant value to shareholders at a pace higher than past quarters as we made 5.8 billion of share repurchases. Okay, 5.8 billion of share repurchases. Now that is something that I like to see. They're eating their own shares while the share price has been way down. The transaction underscores our confidence in our business outlook, and that's from the Chief Financial Officer. We'll just look at this top line, and then we'll go to the presentation, which has got a lot more detail. Revenue increase of 4% year on year, so that's something that the market would not have liked to see. It's not huge. It's not huge at all. All right, let's go to the presentation and see if we can dig in and see what's going on with the business in different segments. US total revenue, $33.5 billion. Net cash position, we want to see that, $55.8 billion. And if we go and see what the market cap is, 188 billion, enterprise value 155. So the cash position is pretty strong right there. They've got a lot of cash, and that's why they're doing buybacks. What are they going to do with this cash? Best thing they can do is invest it. They are thinking in themselves, and it shows confidence and buying back when the shares are down 75%, as we saw. Taobao and Tmall is winning the mind share of our customers. Okay, mind share, does that mean actual market share? This past quarter, we achieved high single-digit online GMV growth and double-digit order growth. Alibaba's cloud overall revenue, excluding Alibaba consolidated subsidiaries, grew at 6%. Driven by double-digit public cloud growth and increasing adoption of AI-related products. Okay, 6%. Now, when we compare this to the US counterparts, that's pretty low. And double-digit public cloud growth, and they do mention AI there. They have come out and talked about their AI initiatives. Hopefully that can lead to actual revenue and profits in the future. Alibaba International Digital Commerce Group, which has been growing. We've seen that from past quarters when I've gone through this, that's been growing strongly. It continues to achieve robust revenue growth driven by rapid order growth in cross-border businesses, especially from AliExpress's choice. So AliExpress is one of the areas that has been growing substantially internationally. Other businesses are improving their monetization and operating efficiencies, some of which significantly reduce losses year over year. Okay, we're going to have a look at that. We will have a look at the segments and see what's going on in the segments. Okay, they put this up front. Cash return to shareholders. This is the buyback. So we can see here the increased buybacks. Look at that, 5.8 billion there. We can see over the quarters it has been increasing. Back in 2022, it was 2.1 billion. It's increased to 5.8. I think the market will be liking to see that, and some value investors will be liking to see that. Warren Buffett, for instance, likes to see buybacks when share price is low. That's what they do there. Berkshire, when they think the company is trading below intrinsic value, that's when they do buybacks. So when the share drops 74%, imagine if Berkshire did that, they'd probably be buying back hand over fist if that actually happened. Income from operations 15% down from 23 to 24. Net income 27% down. Net income attributable to ordinary shareholders 29% down. Now here we can see the breakdown of the segments. We see the revenue from Taobao and Tmall Group. Their biggest is 1% down and 6% up for Cloud Intelligence, which they mentioned in the highlights. And Alibaba International Digital Commerce Group, 32% year on year, which is growing reasonably fast. And the Logistics Group, 16%, double digits. And Local Services Group. So these are smaller, these are growing more. So it's catching up to Taobao and Tmall. It could do over the years, possibly, if it keeps going. But they ideally want to get Taobao and Tmall Group growing strongly. Both of these top ones growing strongly is the aim. And the market would not be liking to see what's going on there. There's really lackluster, anemic growth, as you could say. At least it's not a massive loss or anything like that. But not great, really. There's the Cloud Intelligence Group, which they really want to get growing faster than it is. Increase of 6% is not really what investors want to see and not what the company wants to see either. Alibaba International Digital Commerce Group and revenue from international commerce, an increase of 38% compared to the quarter of 2023. So that's an area, a bright spot there. International digital commerce business, which includes AliExpress, Trendyol, Lazada, and Alibaba.com. So that is definitely growing fast. They want to get their domestic business growing better, but this must be difficult considering the economy. If you've seen headlines and read about the Chinese economy, very difficult to do, I expect, in the quarter. And they have had increasing competition from the likes of PDD and JD, and it's not the kind of growth that investors would like to see, really, is the bottom line so far here. Buybacks are very positive while the share price is down. If they continue to do that, Monesh Pabrai calls it being a cannibal or an uber cannibal, eating their own shares. If they do that while the share price is down quarter after quarter, and they've got the cash to do that, we've seen that they've got a lot of cash, that could be something that is a positive. Eventually, the market, you'd think, should recognize that, and that should drive the share price over time when they're actually just taking shares off the market with the cash that they have, investing it in themselves. Let's have a quick look at so-called super investors who are invested in Alibaba. Ownership count 9 investors, super investors from Dataroma who own this. There are others, of course. This just has a few investors on the value investing side usually. So Michael Burry has added to his position 24% in the quarter, and Howard Marks' company just added a little bit. Who has reduced? David Tepper reduced to 6.67%. But I do think that Alibaba is actually still his biggest position. I was looking at that before. Very prominent investor who's done very well over, the last decade or more. So what do you think? I'd love to know what you think about these earnings, how it's going for Alibaba from quarter to quarter, if you've been following along with me, and these investors buying as well. Do you think they're making a good decision by buying Alibaba in the past few quarters and basically waiting till it goes up? It doesn't look like it is at the moment, hoping for improved fundamentals, but buying back, as I said, should increase the share price over time, but there's no guarantees of that. As I said, non-investment advice. Don't give stock tips or anything like that. It's up to you. For me, I'm still holding it. Turns into opportunity cost if you hold a stock for too long and it does nothing. It's been pretty much flatlining since mid-2022. It's sort of been trading in a channel. It hasn't been going down more. past about 75%, but hasn't been going up either. So how long will these investors wait? It depends on opportunity cost of where else you could put the money. It's the biggest stock that I own, the biggest cap stock that I own by far. It's the worst performing stock in my portfolio. I much prefer small and mid cap stocks these days. It is my only mega cap stock, or it was a mega cap stock, but I guess it still is. And over on Patreon, I have talked about this before in the weekly investing updates. Talk about the small and mid cap stocks and investing in those. Also stock analysis, secret sauce modules there. It's US $5 to join. You could just join for a month and see the whole lot. Binge watch if you wanted to, the exclusive content on there. Also post the public videos on there ad free. And I want to tell you about this offer I have from ShareSite for my community, my viewers, special offer. If you go to the landing page, I'll put a link in the description. ShareSite is a portfolio tracker and manager. I wouldn't recommend anything that I don't use myself. It's very good. I have different brokers so I can bring in my trades. Not that I have many trades. You can bring in historical trades too, so you can see performance going back. If you're not sure about what that is, know your true performance. There's a video on this page if you want to go there and see more about it. It also helps with tax reporting, of course. Very good, makes it easier for the accountant. Now on screen, I'm going to put a link to what YouTube thinks that you should watch next if you're watching on YouTube. And hi to everybody watching on Spotify. I really appreciate you watching over there as well. It's growing nicely over there. And a subscribe link on screen. Do subscribe to this as well if you're not subscribed already. And thanks for joining me today. Thanks for your company. And I'll see you in the next one.